Hello friends, CA Institute has come out with RTP for its November 24 exams. Is there anything new in that? Is there anything unique? Actually, for students of IndigoLearn or students of OneFin, there is nothing new. Okay, if you want to know why there is nothing new, please click the like button, share button or subscribe button and follow us, because this is one channel where we give you all the tips and tricks for your CA final exams. Okay, so if you are writing for CA final November 24, then this is the book that you need to have. What is this book? This is the book called P600 Plus. In fact, this book, we also give soft copy, the link of which is available in the description to this video. Right. What does this book contain? This book contains 600 plus questions from MTPs, RTPs, practice manuals, study material, suggested answers. So everything fully comprehensively covered, including the solutions what they are given by me, not necessarily by the institute, because some institute suggested answers are not proper, right? So this is the book that you should have. And why am I saying this is the book that you should have? Because entire RTP is taken from this book. Now every single question, obviously there are some number changes, I am not disputing, but every single question we have solved it in the class. We have solved it in our CA final full lectures. I have given some, in fact some of the questions I have solved in my revision classes, and solutions for all these are available in the P600 plus. So I strongly request, get your own copy of P600 plus, or you can access it in soft copy form as well. Okay, now let us go and see what exactly is there in this RTP. Okay, first two questions are one is question on portfolio management. This is a question on portfolio management. It's a very simple question where they say that there is a market is giving this return, aggressive stock is giving this return, and a defensive stock is giving these returns. Based on this, what is the beta of the defensive stock? What is beta formula? See, ideally, if you have direct data, you can take when there are only two data points. What do? Change in return of the stock divided by change in return of the market. So here defensive stock is 18 minus 9 by 25 minus 7. So this is 9 by 18, which is half. So answer is 0.5. Very simple. Then if the market return is equally likely to be 7 or 15, then expected return of the aggressive stock. If it is equally likely to be 7 or 15, means 50-50. So aggressive stock 50-50, 40 plus 4, 44 by 2, which is 22. See, super simple. Alpha of defensive stock. They've asked alpha of defensive stock, not aggressive stock. Okay. What is beta of defensive stock? 0.5. So 9% is equal to 0.5 into 7 plus alpha. This is that sharp single index model. Okay. So 9 is equal to 3.5 plus alpha. So alpha is equal to 5.5. Again, very, very simple. Modern portfolio theory was propounded by Markowitz. As per capital market line, the theory, the portfolio is lying on the CML over the market portfolio. This is one where I have a issue. It is actually called borrowing portfolio. In the RTP, they have given answer as diversified portfolio. It is not correct. I will show you why. So if you look at portfolio management page number 6.32, they very clearly said this is market. Below this are lending, above this are borrowing, because you invest in market by either borrowing or you sell off something in the market and put some of that money in risk-free assets. So this is borrowing portfolio. It is very clear. They made a mistake. I think they will issue a corrigendum whenever they have to issue. But this is the capital market line. This is the capital market line. Very, very clear. Okay, so don't unnecessarily get confused. Sometimes ICA makes mistakes. Then there is this question from mutual funds chapter. What is this question from mutual funds? And by the way, this question is question number 57 from P600 plus of portfolio management chapter. This is straight question from there. There is no difference in numbers also. Okay. Then mutual funds. This is slightly, there is more working in this question, so I will not do that working. But this is question number 21 from mutual funds chapter in P600 plus. If you want, I can actually open and see it also. I will show you. Mutual fund 21, right? Look here. Mr. X on so and so date initial offer, mutual fund investor 10,000 units having face value. On 31/3 dividend was paid. Mr. X found that his annualized yield was 153. On 31/3/2017 20% dividend was given. On 31st March he redeemed all the balance 11,296. Annualized yield 73.52. What are NAVs? What was our question? Mr. X in 2021 during initial offer invested 10,000 units. 153.33, 73.52, 11,296.11. Same to same ditto question. 21st question in mutual funds chapter from P600 plus. Okay. Next, moving, and these questions are fairly simple. If you solve as per the logic, what you have given there, you will get. Next is question from derivatives chapter. This is a question on somebody is having some shares, Mr. H is holding some shares. If there is a downside risk, what should he do? Obviously, you should enter into a put option. And what is the various payoffs if the eventual closing price on the date of expiry of put option is 2000, 2100, so on and so forth. This is question number 6 from derivatives chapter from P600 plus. So those of you who are watching or who have enrolled with CA, one Fin's classes for AFM, you need not bother about RTP. Those of you who have gone through our revision classes or who have all purchased the book, this book, what I've been referring to, the P600 plus book, you need not bother. Those of you who have these, soft copy of this book and are practicing from it, you also need not bother about the RTP because everything is covered in the RTP, okay? Which is why I'm saying, those of you who are not subscribed to our channel, please do subscribe, like, share, because there's a lot of information that we give out in this channel. Anyway, moving forward, next one, this is somebody has a portfolio, he wants to invest in share with rebalancing. Now, this rebalancing question is very, very similar to question number 7 from portfolio management chapter. And constant proportion portfolio insurance policy. Please remember, this is an important thing. What is the floor? How is the floor? What is the multiplier? How is it set is given here. Okay, you have to remember that formula. If you do not remember that formula, this question is gone. Okay, I am not here to just repeat that I have covered this question in the class. Okay, this question you have to remember the formula. This is question number 74, not 70, my bad, 74. Okay, there is a floor number. How is the floor number arrived at? What do you do with the floor? What do you do the multiplier? What will you do? All of that you should remember that formula. The formula is, if I am not wrong, multiplier into what is the total value of the portfolio minus the floor. Basically, that is what will give you investment in equity share. So, you can have a look at it, question number 74 in portfolio management chapter. Then, you have next question on business valuation, yes, and it is compute EVA. This question also we have solved in the class, very, very similar because numbers are slightly changed, 29 and 40 of P600 plus. There is nothing unique in this. There is nothing unique in this particular question. Is there anything unique in other questions? Let us go ahead and see. Then Forex. Now, Forex also is basically a hedging. How will you hedge and all of that? It's a very simple thing. Probability they have given. Please remember, if at all you have to do options, when there is probability given, do not do option exercise by multiplying these probabilities with these numbers. You have to check option exercise whether it will get exercise or not at each level, then the payoff you should multiply with probability. Do not forget that. This is very simple question from question 67 from derivatives chapter. This actually was asked also in November 20 new syllabus. Okay, something very similar was asked. Okay, so they have given something from your past 3-4 years exam. Then you again have another question on Forex, and this is a nostro vostro. This is something I hate. I genuinely don't know why this kind of questions are asked, but this question also is question number 77 from P600 plus. And this is also a steady metal question. This is from your Forex chapter. Then advanced capital budgeting. This again I think is a ditto question. Okay, this is a question where they want to do which project should be selected and why. Okay, so it is a very simple question. This is question number 30 from P600 plus from advanced capital budgeting decisions chapter. So this again is a question also from steady material, by the way. Okay, please go through this question. This chapter assumes significant importance in this attempt because in the first 2-3 attempts they will ask more questions from this chapter, which is a newly introduced chapter. Then interest rate risk management. This again is a very simple question. OIS, I'm sorry, overnight index swap. This is a question from 19 and 20. Very similar questions. Also SM question 19 and 20 P600 plus. Okay, from interest rate risk management chapter. Interest rate risk management. Okay, then comes your security valuation. This is the repo. Now this repo, a lot of students sometimes forget and go, whether how it should be computed, whether it is upfront, not upfront. Please remember this concept. Okay, this is again a question from security valuation bonds, question number 42, security valuation bonds. So I split the security valuation chapter into 2 parts, equity and bonds. So security valuation bonds chapter P600 plus, please have a look at it. Then it is basically what is repo rate, dirty price, screen price and all of that. Then you have a question, somebody is holding what is face value, they don't have intention to sell, they will lend under stock lending scheme. Okay, stock lending, I have explained this in the class. You can borrow shares and short them. Because you are borrowing and shorting them, you have to pay the lender some kind of money or commission or something, and if there are any dividends paid, those also have to be given. And bank guarantee will have to be borne by the borrower. Okay, dividend, you see, dividend also is there. This is also a question we have solved in the class. This is from illustration 44, and this is from RTP May 22. Okay, this is again a P600 plus. If you have solved, you are very, very thorough with this. Then coming to question number 12, this is an M&A question, mergers and acquisition chapter. This again is a super simple question. This is illustration 38. This in fact is a question from July 21 new. Okay, the RTP is basically, a lot of, almost every question they have taken, whatever they have given in this, we have in this RP 600 plus. So please, please, please buy or, have a look at the soft copy and study from this. Then IFM, there is this famous Nepal project. Okay, this is illustration 20, and this is November 20 new syllabus question. You can anyway look at it from illustration 20 in P600 plus. Okay, this is question number 13. Now, explain the types of tests that can be employed empirically to verify weak form of efficient market. Weak form of efficiency. You have this run test and a bunch of other tests. Please remember, run test is one test. Then you also have this serial correlation test and filter rule test. For weak form, semi-strong and strong, for each of them there are different tests. Please learn at least the side headings. Okay, if you know the side headings, probably you will be able to write them in the exam. Okay, then they have asked, last question is on what is a unicorn and who is the first unicorn. I think InMobi is the first unicorn. What is a unicorn? Has 1 billion valuation. It is very rare. Other common features are technology, so on and so forth. InMobi is the first unicorn in India, funded by SoftBank. Okay. This is how the RTP for November 24 for CA Final AFM is given. There is nothing new, but there is one mistake which I highlighted, and everything is from this particular book. If you study this, if you attend my classes, you need not go anywhere else. Okay, so I hope all of you are preparing very well for the upcoming November 24 exams. In case you are not preparing, please do start preparing now. Very, very important. And please do like, share and subscribe to our channel so that more and more videos will be coming out with in the coming few days. We'll be coming out with revision lectures for FR and AFM. We'll be coming out with concept minute revisions with 10-minute, 15-minute recap of the full chapter. A lot of stuff is going to come out, so do watch out. Okay, so please study well and all the very best.